on the stocks that we have in our long-term buy and hold watch list. So just to clarify, these are stocks that we're going to hold for up to 3 to 5 years. So we've no intention of kind of trading them as such. And we're not ready to buy them just yet. And I'm going to explain why in a second. So I want to go through each one of them just to give you an update. And sometimes in the past, we've been too slow to act, if I'm being brutally honest. We've probably looked for the stars to align too much. But actually, when you see some of the examples I'm about to give you, it's actually quite a good discipline. So I'm going to start off with Dell. This is the one we're probably closest to buying now. So what we were waiting for, this probably came into our watch list up here somewhere. And we were waiting for this downtrend to end. You can see that the highs were getting lower all the time, which basically is the definition of a downtrend. So what you've seen now is actually the stock has broken out of this established downtrend, is now kind of trending sideways. So actually the stock is up about 1.2% today. We're probably going to wait for it to drop a little bit down to this support area, and we will look to buy into Dell. So just from a fundamental perspective, our models have about a 40% upside. And again, just to remind you, serious backlog of orders for their servers, which is great on one hand. On the other hand, the problem is the raw materials, i.e. the chips, etc., the cost of them have been going up exponentially. So analysts are worried about the margin pressures that might be on those sales, even though they have a huge backlog of orders. Obviously, if the cost of materials going into building their product goes up, margins get squeezed. And that's why the share prices come down so much. We feel it's come down to a reasonable level to warrant the risk. That's basically it with Dell. So a couple of the others, I'll just skip on to Nvidia. That's next. You can see this is kind of pretty much trended sideways for the last 3 to 4 months. So when Nvidia did jumped up here, we kind of got out of it. We had said we had enough of Nvidia. It will, at that moment in time, the valuations were extreme back in October. But of course, Nvidia has continued to execute very well. But it's trending sideways here at the moment. And I suppose the market is really pricing in now the fact that Nvidia is going to have increased competition down the line. They're not going to have this market to themselves, and therefore there will be a squeeze on their pricing pressures, and margins get squeezed as a result. So that's the reason why you're seeing consolidation here. Our view is that this might be a good opportunity to start having a nibble at the stock. We're just going to let the current little volatility play itself out. And then moving forward quickly to the 3 stocks that recently came in to our watch list. And I want to explain, look what's happened since. So Oracle came into our watch list up around here, and we've said we're going to wait for this downtrend to end. And we did, rightfully so, we did that, because if you look here, right down to this level here, that's a further 15% it's dropped. So we've been right to stay away from the stock for now. And we're going to continue to wait. So again, Oracle is another victim of the success of AI. A lot of software companies are getting crushed at the moment because the market is starting to think AI is actually going to cannibalize what they do. And there is some truth in that, by the way, but I think Oracle has a very good AI offering themselves, and that's why we're interested. PayPal, look what's happened. PayPal came into our watch list around here, dropped. Earnings were a disaster for the company, big shakeout in their management team, and sold off 20% yesterday. It's down another 3.5%. Again, another reason why we were right to stay out of the stock. Now, PayPal is suffering from, what once was very innovative technology, taking payments online, is now considered a bit of a dinosaur, and it's having trouble turning that around. And that's the reason why the share price is selling off. They missed their earnings target, and they were a little bit light on their revenue target. And I suppose the market's had enough and is punishing it. But I think that's actually creating an opportunity. The way I look at it is that it's a very competitive market that they're in now, but I still think that they have a significant say in it too. And then Salesforce is another, similar to Oracle, continues to make these lower lows. We said wait for this to end, and we'll continue to wait. It's down another 4% today. Again, Anthropic had news out yesterday about what their offerings are going to be, and the market is basically hammering software stocks, which CRM is, saying that actually, will people actually want to pay for that when they can get tools elsewhere now? And that's the reason why Salesforce is falling now. But the valuations are compelling here. But you still don't jump in until this downtrend is over. And we've got to see something like what's happening with Dell with those stocks, like a lot of trending sideways here, and we're being patient today. It's up 1.7, not jumping in yet. Gonna wait. I'm sure it's going to revisit these lows at some stage, and then I'll probably take a position in the stock. So I just wanted to give you, I suppose, a heads up as to our rationale for being extremely patient getting into longer term investments. You know, just because something has fallen 20% and it's offering good value doesn't mean it's not going to fall another 20%. And you really do have to do your homework in each stock. And then secondly, let the downtrend end before you go in. Don't jump the gun. Even if you miss a bit of upside, so be it. You're better off doing that than watching something like Oracle happen to you, for example. Okay, if you have any questions on any of those stocks, guys, remember to check Equity Scan as well. All the updates on these stocks are in Equity Scan. As a bit of news is emerging, we're updating Equity Scan with our thought process. But we just thought we'd give you a quick heads up. Thanks and bye for now.